When looking at the iShares 20-year plus Treasury Bond ETF with a symbol of TLT, it's important to consider what your view of interest rates is because the relationship between Treasury yields and TLT is the key you need to understand. Generally speaking, if you predict interest rates to rise in the future, it's best to avoid long-term bonds or TLT because they will typically drop in value. You need to understand that TLT is the inverse of the level of interest rates. Thus, if you believe interest rates will fall, then it makes sense to invest in an ETF like TLT because TLT will typically rise when interest rates fall. To some, this is difficult to understand, so one more time. TLT is the inverse of interest rates. When interest rates rise, TLT drops. And when interest rates fall, TLT will rise. So, let's take a look. Before we talk about TLT, let's take a quick look at interest rates. So this chart here is the monthly, going back several years, the monthly chart of the 10-year Treasury yield. And the close on Monday was just under 1.5. It was at 1.48%. Now, you go back here, it's easy to see that there's a general trend heading on down. Somewhat of an anomaly right here. But you go from, say, that point down to here and then all the way up, there's a pretty good trend line heading down here and then also on the bottom as well. So you have a channel heading on down, and it's been heading on down for 30 years or more. But one of these days it's not. It's going to turn around. Well, let's see what we show here. Let's go down into the MAC. You can see that the separation between the fast line here and the slow line is still pretty wide. So even though we've hit this temporary top, and you can see that in the interest rates, we've hit this temporary top, anything can happen. There's plenty of space between, say, the slow line and the fast line for anything to happen. So it's possible that we can come on down and then have another reflection back on up. But for the most part, I think it's starting to hit some resistance, and you can see that in the slow stochastic and the Williams here. We've hit this top and we're heading on down. Also in the Williams heading on down. But there's times where things can maneuver up and down and not necessarily head down directly. So because of so much space between the fast line and the slow line in that MAC, I'm saying that interest rates have the probability of dropping, but they can spike up or go sideways for a while. We can keep our eye on this, but for now, I think the probability is that interest rates are going to go down, but not quite yet. All right, let's go now take a look at TLT. And we're now looking at the 20-year monthly chart on the iShares 20-year plus Treasury Bond ETF. And the symbol is TLT, and the close on Monday was 143.47. Now, if you go back here to, say, 2007, from that point in time, a pretty good run all the way up through here. And you would be expecting that given that interest rates continue to drop. Now, if you're at this point here, it looks like perhaps a good buy time, but I'm not so sure about that. Taking a look at the price chart, you can see that sometimes TLT takes a year or two to really bottom and base. Not necessarily here, but other times you can see that there's an extended period. Let's go down here into the MAC. Volume looks fine. It's got a pretty good increase going on, so that's good. But into the MAC, you can see the separation between the slow line and the fast line, and that is sort of the inverse of the separation of the 10-year yield of the fast and the slow line there too. There's a pretty good separation, which means a lot can happen. So, such as here, pretty good bottom and basing, but it took a while. This was a little quicker. This, I think we said, took a little bit longer. Now, moving on down here into the MAC, you can see we're very, very deep. So in my humble opinion, This needs several months of improvement before you think about buying. I'd like to see that fast line and slow line. I'd like to see a bottoming here and then that gap to close. And that will give you a better idea of how it's trading. Price rate of change looks good there. And the relative strength actually indicates a bottoming there, perhaps a bottom. That spike came down about as low as that, say that back here, but no other point in time. So that's a pretty good sign. Yet I still say that the MAC is the controlling oscillator, so give it some time. Stochastics, probably not all that different here. A bottom process perhaps starting right at that point there. And the same thing in Williams. A pretty good bottom and a rise out of that oversold territory. Back to that MAC. One last look at that. And you can see in the history that goes back, the fast line moves below this zero line. The slow line also moves below this before there's a bottoming and a basing, at least in most of these periods here in the more recent history. So almost every time it's come down here in the last, say, 18 years or so. So I would wait for this to come on down, and you can be looking at interest rates at the same time. But for me, the game is always patience and prudence. And for today, that's ChewDog Charts. Thank you.